Your bank just closed your business account, but the letter won't tell you why. Most founders know, overreact, and they think that they're blacklisted from the entire banking system, but that's almost never the full story. In most of the legitimate cases we handle, the real cause is actually a mismatch between your risk profile and the institution's risk appetite, and this mismatch can actually be diagnosed and fixed. However, how you react and what you do in the next 48 hours actually decides if this is just a bad week or if this becomes a broken business. So the checklist comes first, then the diagnosis, and then what a business like yours needs to do in order to get back in. So as the first 48 hours are the most important and the next steps really define what's going to happen, we'll put the theory aside and we'll start with what you have to do today if this happens to you. But first, let me talk about why I can actually be this direct. My name's Eric, I'm the co-founder of Redomiciled, and we're a consultancy service around complex transactions and international banking. We work with over 170 partner banks around the world and helping higher risk clients to actually settle transactions. Plus, we also have our own international banking infrastructure. So when I talk about these topics, I know exactly what I'm talking about. All of our team has been working in London in the banking industry previous to this. So when we talk about these topics, we know what we're talking about, we've seen it from the inside, we're running our own payment infrastructure, and therefore we know exactly what you need to do when this happens to you. So typically after a closure or an account freeze, we always see the same pattern that the UBOs and individuals this happens to take. And typically it's not the closure that's the problem, it's more the reaction that causes the bigger problems later on. So the first step is to not panic. And what I mean with this first step is don't take any random action. You might be stressed, you might be angry, you might want to call the bank, complain, ask why this happens. Don't do any of this stuff, because the steps that you take now actually will decide if you can recover everything or if this is going to be damaging and if it takes a lot more time and effort later on to repair this. So don't take any immediate action. Step 2 is that you want to preserve everything the bank has given you. So the email with the closure notice, please keep it. Take some screenshot of the account terms. Make sure you have the right timestamps and everything the bank has given you so that we can later build a case and we understand what has happened, why you might got deleted from the account or why you got kicked out, and we can actually build a story and we're not making the same mistakes again. Step 3 is to check what actually still works, because when you get banned or blocked from an account, it's typically always a bit different. Like some accounts, they will just restrict certain transactions so that you can't really send money to other parties anymore, or there's no more ingoing transfers, but you can still pay yourself. Some actually freeze the amount and they demand documents. Sometimes nothing works anymore, and that's what you need to figure out, understand what's possible and what's not possible so that we can take the right steps from here. Step 4 is to download all the statements while you still can. So that means your balance statements, the transaction statements, the beneficiary, your internal records. Just make sure you save all of that. You might need them later, either for a new bank, for this bank, or for other purposes. And typically, once that time frame is over, it's really hard to get those documents. So save them, put them in a folder so that you have them later on. Step 5 is that you want to have the remaining funds transferred to another account and really only do what the bank permits. Don't try to send them to yourself, as in personally. Don't send them to a friend. Don't send them to another business. Send them to another account in your business's name. That's typically what's permitted, but double check with the bank so that the funds are secured and in a new account. Because if you now transact with other parties that are not allowed, then you might actually have a freeze and then the money is locked and then it's becoming a lot more difficult from here. I want to be very clear, when you're listening to this checklist, this only applies for, I would say, the normal cases when there's a mismatch between the risk profile that you have and the institution's risk appetite. If in that letter anything appears to have to do with sanctions or something more severe, client's money that you're managing because you might have a license for that is frozen, insolvency now is on the table, you definitely do want to escalate that to a lawyer, and a YouTube video typically is not enough. We're just dealing with most of the cases, 99% of the cases that we're typically seeing when clients are coming to us in this video. Typically when this happens, we want to be looking at different accounts that match the risk profile. However, if you really want this account back, you can do a quick self-assessment. So look at what you've told the bank that your business is doing. Look at where you said you will be transacting in the KYB process or in the KYC process. And then look at what you've actually done with the account and be really honest to yourself. And if you can already see that there is a bit of a mismatch, you've been maybe saying things a bit more optimistic than they were, then you can typically forget that. However, if you think that you've really been very honest with the bank and you've actually done exactly what you've told them you would do, then you can typically try to file a complaint or ask them if they can review that again. However, most of the time you want to just be looking at new accounts, either by yourself or you want to come to experts like us, and we can look at what could be a more suitable banking infrastructure for your business and the types of transactions that you're doing. So there's one more rule that is more important than the rest, and that is, do not now fire 10 different applications to 10 different banking providers because you're stressed and you want another account, okay? This is where a lot of mistakes happen, and typically you don't want to burn all these options from you, because once you're denied one time, you'll typically not get back in, and sometimes even those, different banks communicate with each other, so don't do that. Don't ruin it for yourself. You can either come to us, work with experts like us and understand, okay, what is actually my risk profile? What are the transactions that I need to do? And then we'll find you the right banking providers. Or watch a couple more of our YouTube videos, try to figure it out yourself, have a cool head, and then look at what can be the next applications. But definitely don't just shoot out applications, because that won't work. You'll make mistakes, you'll not have it thought through, and then you're just burning yourself a couple of banking relationships, which you really don't want to do in 2026. So what most people miss is that typically a closure or frozen account is a two-sided decision, and most of the time it's just a provider mismatch with your risk profile. And that's not a global statistic, that's just what me and my team know from working in banking, having our own banking infrastructure, working with Redomiciled with 170 partner banks in a higher risk tier. It's typically that mismatch, and I'm going to explain you now what exactly that means. So everything in banking and finance is about risk. And when you think about commercial or business banking, it's the risk that your account and your profile actually carries for the bank to get into troubles, and how much work it will take them to measure that risk and do the due diligence, and if that's worth it for them. So you have different risk variables, and they are depending on where's your company incorporated, what does your business do, who are you transacting with, in which countries are you sending payments, and so on and so forth. And also personal stuff like where are you actually based, where's your passport from, etc. And that together builds a risk profile, and that's typically done with AI nowadays, but typically you're just having that risk cluster. And then the bank has a risk profile that they accept and the certain risk appetite. And when there's a mismatch, either when you apply or while you transact and you just trigger a risk score, and then they're looking into you and they see that they're actually not comfortable with your risk, that's when you get off-boarded. But that doesn't mean that you can't work with other banking providers. It just means that that institution is not comfortable with your risk anymore. Also, those risk profiles, they vary, they change, so it's sometimes possible that you had an account for multiple years and now they're changing the risk profile and now you've been off-boarded. That's also completely normal. These things are not static, they're changing, and typically as providers grow, they're taking less and less risk because now they have so many customers, and they want to rather have the lower risk customers with less work than the higher risk customers, which make them look into the account a lot, make sure that everything's going well. But there's obviously also providers like our own banking infrastructure who are specialized on that higher risk and who are taking on the enhanced due diligence and making sure that we can serve you. We just need to look at everything in more detail. So from the banking side, there's two reasons. The one I've just described, where they're just not comfortable with your risk anymore. The other one is that they also mainly have underlying banking partners. So mainly banks are built on banks. So when you think of EMIs, they're built on banking partners, and even some of the banking solutions, they use underlying banking partners. And sometimes it's also not the bank's fault, it's just the underlying banking partner doesn't really accept that risk profile anymore and they force them to offboard you. So from the banking side, it's either that they are not comfortable anymore or their banking partner. For you, it doesn't really make a big difference. It's just for you to understand that it's typically a mismatch, and that's why you're getting offboarded. And now we need to basically look at a plan B and how you could actually build a more sustainable banking infrastructure that is comfortable with your risk. So I appreciate all of this was very theoretic. Let's actually look at a client example to really understand what we mean with this and what you can do and what you cannot do. So one of our clients, they were a crypto payment provider. So they were doing a couple of things in the crypto space. They were basically helping, for example, e-commerce stores to accept crypto. So the client from that e-commerce store would want to pay with crypto, and then that was converted to fiat and then sent to the account of the merchant. So basically like card payments just with crypto, or if you wanted to write an invoice in crypto for larger amounts, maybe for like, a piece of real estate or a luxury holiday, they would also give that to merchants. So they were basically just helping clients around the world to accept crypto from their clients. So basically just like a Stripe for crypto. And that's a super legitimate business. But they were trying to apply for a very well-known banking provider, and those guys were just looking at this and saying, okay, well, there's a lot of crypto transaction happening with a lot of different stakeholders around the world that we can't really control, and we don't really know how it works. Plus, they were obviously incorporated in a more beneficial jurisdiction for the crypto regulation. So the bank said no, and our client, the crypto gateway, they came to us and they said, hey, we don't know what happened here. We have licenses. We're doing everything completely by the book. Why did we not get this bank account? And the reality is, this is just a very good example where banks, they just don't want to do the extra work, because that banking provider is a very, popular and famous high street bank, and they were just not comfortable with the crypto part of it because they didn't really know how can we check if those crypto transactions are legit. Is that actually worth all the work for us? Are they actually going to make us that much money? Because we will probably need to put people on that desk who can actually understand what's going on here. And that's why their decision was no, and that's what we communicated to them. But that didn't mean that they can't work with good banks. So we were going to Switzerland and we were choosing a banking provider who's very focused on crypto, because in Switzerland the crypto regulation is very far, specifically in places like Zug, Switzerland. And they were very comfortable with their business model. They understood immediately what it is they're doing. They knew exactly how they could monitor those transactions and to make sure that they're compliant with their license. And then they got a great bank account at a Swiss bank that just was simply a match between the risk profile of our client and their risk appetite. And that's just how you can understand why sometimes you get a no. It's not because you're doing something wrong, it's just because you're just talking to the wrong provider in the first place. One thing I also want to be very transparent on is that typically when you're in a higher risk industry, you go through a process that is called enhanced due diligence. So in that example, I was making it look very easy. In the end, it was just to prove a point of that mismatch. The reality is that the onboarding process is obviously quite lengthy, even with that Swiss bank that is very focused on crypto, right? Because typically when you're in these higher risk industries, the process just really needs you to show your license, the type of transactions, a couple of previous bank statements, and so on and so forth, so that the bank can really get familiar with how you're operating, and then they can understand if they want to do it, and they can check if this is all compliant. So of course it's the mismatch, but it's also the right application. We can talk about this in another video. When you reach out to us, we can always discuss on how you increase your chances on an application. But I want to be quite transparent, right? If you're in a high risk industry, you will definitely go through a more lengthy onboarding process than if you're a non-high risk business. And this example also should demonstrate why we've told you about those steps and why you should follow those steps that we've lined out in the beginning of the video. Because, for example, keeping all of those records is super important for the next application, right? So you want to be having your statements, your past transactions, because that will make it a lot easier for the new bank to understand how you're working, rather than starting again from zero and having to describe everything with invoices, etc. You can simply show the transactions. They can look into those accounts as well. It'll make it a lot quicker, a lot easier. They can see that you already had a good banking relationship or reliable banking relationship. And then also you don't want to do these mass applications, as I said, because you're going to make either mistakes on these applications and then you're just going to burn yourself and you can't work with those banks if you've chosen the right banks, or you're simply not choosing the right banks and you're wasting your time. And with our own payment infrastructure and the banking network that we have around the globe, what we'll do is we'll look at exactly what has happened in your case. We'll do an audit together with you. We'll understand why this happened and what can be the next steps. And then we'll talk directly with the banking providers we work with around the world. We have direct contacts there, and we can say, hey, look, this is the business. Do you want that business? Is that something that you think you can handle? And then we'll obviously start the enhanced due diligence process. So it's often not about just doing things quickly and unorganized. It's about following the right steps, having the right structure in place, and then getting the results that you want and having a banking relationship that lasts very long. Another thing that we can sometimes do, and normally we try to avoid it, but we definitely help our clients with that as well, is restructuring. And of course, we normally just want to find a bank that matches your risk profile. But sometimes your risk profile is just simply too high because you may be in a high risk industry, you're transacting with other high risk clients, and then you're also in a certain offshore territory or in a higher risk jurisdiction. And then we need to think about, okay, how can we reduce the risk? And obviously we can't really change your business model or the people that you're doing business with. So here it could make sense to bring the risk profile down. So for example, if you're incorporated in a higher risk jurisdiction, maybe for your license or whatever, maybe in the Caymans or Bahamas or Hong Kong or wherever, we can maybe bring the risk level down by having either a separate entity or a new entity in the US, in Cyprus, if you, for example, want to work with banks in the US or in the EU, and that will then increase your chances to work with the same or other banking providers again. So that's typically the last resort, the restructuring. We do that across 48 jurisdictions to help you get access to banking, to card processing, but that's really the last resort. But seriously, sometimes that can help, specifically if you want a bank in a specific jurisdiction or a payment provider in a specific jurisdictions, as I've just lined out. However, there's one warning I have to say. Restructuring or a different provider is not always the solution. So obviously if you're doing something illegal, fraud, if you're harming your customers or you're doing things wrong, that's where we can't help you, where other banks can't help you. That's just something that's generally not possible. We will look into your operations as well, and we'll make sure that that's not thing you're doing, because then we can't work with you. And same it is for the bank. So when it has anything to do with that, you're typically blacklisted, and then there's no way into the banking system because you've obviously done something wrong. So please don't even reach out. That's nothing we can support with. So the businesses that survive debanking in 2026, which is definitely a bigger topic, we're seeing more and more of those cases, are the ones that are actually treating banking like infrastructure, and they do the right steps. They don't panic, they don't do mass applications, they're saving all documents, and ideally you're also working with experts like us to make sure that you have sound banking access. Further, you always want to have multiple accounts. One account is a single point of failure. That's something we never recommend. And if you want to talk to us and the team about your situation, always feel free to reach out. There's a link in the description. And if this is interesting and you like those type of topics about international banking, follow this channel for more updates.